Let's get started now with the panel. The idea of this panel was to, for the first time at this conference, not just getting too much ideas and prototypes and so on being just created by startups. You know, startups have been very active in the tokenization field, but let's now today talk with the more senior, larger companies, what they are doing on behalf of the issuance side, trading side, and industrial side. So what are, for example, landmark projects of a larger scale? That's why, for example, we have Siemens here, we talk about other projects. So that was the spirit of this panel, so to say. With this, I would like to ask everyone to very briefly present himself and the company he or she is working for, and maybe we start with, Katharina, ladies first, and nice to have you here, everybody.
Thank you. So my name is Katharina Gera. I'm the CEO and co-founder of Immutable Insight. I'm also a supervisory board member of Börse Stuttgart and Fürstlich-Kastellsche Bank.
Thank you, Philip. Thank you for having me here today. My name is Christoph Hock. I'm running the trading desk of Union Investment. So on the one hand, obviously we have a focus on the traditional financial products, cash equities, fixed income, FX derivatives, but also key focus on digital assets for a couple of years right now.
Also, thank you very much for having me. I'm Matthew McDermott. I run the digital asset team at Goldman Sachs, which covers a real broad cross-section of the kind of blockchain crypto market.
Got my own one, thank you. My name is Tim Armbruster. I am the group treasurer of KfW. I oversee the financial markets department. That means the normal treasury activities, the worldwide capital market activities, portfolio management activities, and privatization activities for the KfW group.
Ramin Ghaffari, Siemens Treasury. I'm supporting quite a number of, or I've supported quite a number of blockchain DLT initiatives for our group treasury over the last years, but also digital money, digital euro discussions, publication from our side, supporting BDI. But then also our operational businesses, whenever they came up in the last years with ideas, whether it might be NFTs or other things, my team and me supported them significantly, and especially in this transaction, which we're going to touch today. Thank you for having me here, Philip.
Perfect. So the outline of what we want to discuss is the following. First of all, we would like to very briefly explain three of the very big tokenization projects where basically large companies have been involved. Then secondly, we would like to very briefly compare some of these projects. Will it be private blockchains in the future? Will it be public blockchain systems? That's not sorted out yet, as many crypto people like I have thought. Then we talk about tokenization, why it does make sense for the large companies. We would then move over to a topic which we so far have not had at this conference. That's the DLT pilot regime, which is now starting to be launched. And at the end of the panel, we would like to talk about that existing tokenization projects in specific fields are already possible, but the entire toolkit, that was Christoph's word, the entire toolkit for financial markets is not yet on blockchain. That includes collaterals, repo transaction derivatives, and so on and so forth. So that's basically then the to-do list for the regulator to work on this, please. So with this, let's get started. And I would like to maybe ask somebody to briefly highlight the EIB transaction, Siemens transaction, and also the green bond. Who wants to get started with it?
Yeah, I don't mind starting. So at Goldman Sachs, we have developed our own digital asset platform, and we've facilitated two recent tokenizations, so both actual digital debt issuances. What's kind of interesting about the two of them, one's a native debt issuance to a blockchain, private blockchain, and the other is a tokenization of an existing green debt issuance to, again, a private blockchain. Now, just very kind of high level, the European Investment Bank transaction, we actually executed that transaction with two other joint leads. And I'd say the kind of two or three key features. One, the settlement cycle was moved from T+5 to T+0, and the actual settlement actually occurred within 60 seconds. We actually saw DVP across 2 different chains. So we actually had a native representation of the debt security. We also had a native representation of the digital currency, which actually was a wholesale central bank digital currency provided by the Banque de France and the Central Bank of Luxembourg. We also represented the derivative on-chain. So we leveraged what's called a common domain model, so really kind of standardized terms for derivatives. And we also kind of had lead investors in the transaction. For that particular one, it was AXA. The other transaction was for the Hong Kong Monetary Authority, and this is where they actually issued a green debt issuance into the market in the traditional way. We tokenized it, and the actual representation, the legal representation, was on the blockchain. The kind of key features here, again, were a reduced settlement cycle, as well as the first green tokenization by any sovereign.
Excellent. And maybe Ramin, you continue with the Siemens issuance.
Yes, our paper, our digital security, was issued on the 10th of February and settled on the 13th of February. It was worth 60 million euro. It was from its character more like a private placement with 3 investors. DK Union Investment and DZ Bank investing into it. We have interest payment on it, and we were happily, experiencing and working towards this target since a while. So we were able to reduce settlement from T+7 to T+1, and furthermore, obviously also avoiding a central clearing and a central or global paper-based node. So simplifying quite a few things for us in comparison to our traditional issuances, which we normally do via our Dutch vehicle and the Netherlands. So a long period of over 4 years where we were working towards this target. Giving back to you.
Yeah, and maybe you want to add something, Christoph, or anybody?
Yeah, from an investor's perspective, Philip, we got involved in all 3 issuances. So we've had the first EIB transaction. This was back in April 21. EIB was the first supranational issuer coming with a public issuance to the market. And back in 21, we as Union Investment there was quite a humongous interest of various investors. About 250 participated in the investor education call. But at the end, it was just us getting really invested in this paper. Similar in November 22, Matt was alluding to, we've had the second EIB issuance where we as Union also invested, and most recently the Siemens transaction Ramin described. What was, from our perspective, the kind of sexiness with the Siemens transaction? So it was really taking out some middlemen. So typically we have a central depository like Clearstream being involved. Under German law, we have a so-called crypto registrar removing the CSD. So this was point number 1, highly efficient process. And point number 2 actually was that we got involved directly with Siemens AG as a counterparty, because typically we have a syndicate of banks placing these bonds, and in this instance we've had direct contact. We've had Siemens directly as the counterparty. And from an investor's perspective, what was the kind of what's in it for our client? That's actually the key question. What is the benefit? We've had about a 15 basis point pickup on a 1-year bond, and this actually was feeding directly into the additional alpha, into the additional performance we are able to generate for our investors. So for us as Union, the first transaction was a kind of POC where it took us about 2 2 weeks to get all the internal processes set up, allowing us to get involved in this bond. Looking at the Siemens transaction, I can say that we have now a dedicated process in place, like for all the traditional assets we are also trading. And the Siemens transaction was done in a couple of hours and not in the 2-week period anymore. So for us, important that we really build processes for these digital asset products.
Very good points. We will collect the benefits in a second, but Katharina also want to maybe highlight some impressive tokenization projects in addition to the 3.
Yeah, I think we're in Europe here, and of course all of those projects help to develop what we do here for the ecosystem, but it's a global competition. And so I think it's also just important, so we keep in mind what happens in Hong Kong with a recent transaction in February. We saw $100 million, so also, triple-digit million issuance from an official issuer in Hong Kong. And also what we saw last year with JP Morgan on the Onyx blockchain and with the DSP in Singapore. I think it's important to understand we're still here in a global competition. So we have the ambition and we need to be swift on now growing up. We're in the toddler space. We've all done our first walks and we have now processes. But I think it's important to understand it's not about the Bitcoin or Ether market right now. It's about the big chunks of the debt issuances markets globally. And that's the chunk that needs to be captured. Sorry, neither captivated nor captured. And I think that's important to understand that we need to have fully commercially relevant tokenization projects next. And the ambition can only be go faster, go bolder, and go broader.
Yeah, and I actually think that's a really good point. I mean, one of the things I spend a lot of time is talking globally to kind of central banks, regulators, and sovereigns. And what you actually have seen is this very clear delineation now between cryptocurrencies and the actual application of the underlying technology. And when we think about last year, there was 15 tokenizations, throughout the year. The expectation is there's going to be between 50 to 75 this year. So you can see there's this steady momentum, and it's not just going to be cash securities. You're going to start to see a number of other asset classes. And I think we'll get onto some of the benefits. And when we talk about the EU pilot, you'll be able to see why that's actually going to have quite a profound impact, I think, on adoption.
So maybe we now talk also about the features of the projects. Some of you guys said that the CSD was not necessarily removed, but replaced by the blockchain as a register, right? Then what other features are interesting here? Is it running on public or private blockchain systems? How is this working?
Answering for us, it's running on Polygon. It's a second layer to Ethereum. But what the audience here knows it, but for the traditional industry, it might be new. And it was very interesting for us because we had experience with, private chains, and we also had with Ethereum when we did the NFT recently. But we definitely wanted to do something on a second layer. And then this ended up on Polygon, obviously also due to our banking partner who was supporting us on that. In this case, Hauke Aufhäuser Lampe.
Okay, interesting. And what is the future for all such transactions? Will all run on Polygon? Will it run elsewhere? Will it run on private systems? By the way, where is R3?
I mean, I can certainly, I'll speak from a highly regulated US bank. We are not actually allowed to do anything on a public blockchain, be it permissionless or otherwise, and the rationale being safety and soundness. And so I think most of the development you'll see, certainly from the US banks, JP, ourselves, and many of the others, will be on a private blockchain. Now, I think the layer 2 is a really interesting point, and it's something we actually discussed at the Financial Stability Board earlier in the week. And so the layer 2 actually gives you the velocity, the speed, the cost efficiency of actually transacting, and then actually having the choice of underlying kind of layer 1. And so we actually, when we developed our own digital asset platform, that's precisely the model we went for. So we actually have a smart contract layer where all the transactional activity happens, and then you get the settlement finality on the layer 1 of our choice, which, pursuant to my prior point, is currently a private blockchain.
But now we have two opinions.
If I may step in here. we as a treasury have always been seeking for bank independency and multi-currency and these type of things. So locking in one platform of one bank is but not a durable solution for us. So that's why we also, wanted to try out a public chain. We do see also a reasonable number of good arguments on the security side of the chain, of the technology as such, being that widely spread out, being maybe more stable, and this is, well, to be discussed. There is also mistakes and technical issues on that side as well in public chains, but there is a lot of advantages which we also see. Is this finally decided? Well, we have to sort out. It's a starting.
Luckily, you didn't use the Binance Smart Chain, right?
Yes.
I think that, as you said, the run is, I think, in the beginning, and for me, this is not a sprint. What we see, this is an evolution ongoing, because I think we all have had experience the last 5 years with digital ledger technology. I remember when we in KfW did our first transaction in 2007. I think you did it 2013, 14, 19, the first time. For me, it's important what are the USPs, what our clients and investors look at. If I look at KfW, for example, we have around 430 billion euros equivalent outstanding debt worldwide. Yeah? So if you look, our investors are central banks, official institutions, asset manager, treasurers, and we fund around 50 to 60% in euro, so we fund about 40 to 50% in foreign currencies, sometimes up to 15 different currencies. So important is, what is the USP of KfW? It's large, liquid, trustful, safe transactions. Large and liquid means liquid secondary markets. Yeah? And it's so much important how we generate. I have today a status quo, which the USP is, and of course we like to see this technology growing. We have a lot of local testing, especially with this, but we also have to see that we get the same output in the future. Yeah? And I think this is always thought about if we talk about the different platforms, etc. As only liquid secondary market is the foundation also for a lot of USPs. Yeah?
That's an interesting point. Maybe anybody of you wants to comment on the question about private versus public on the future? Any idea?
I think the most important part is that we have a competition, because that competition will incentivize innovation, will incentivize different features, and then the market will decide. And I do not think we will have one solution. And I'm very much for an open, competitive society. And I think if we look at the other model in China, also with the digital service, with the digital yuan and the blockchain service network, I think it's certainly better if we have, a JPM, a Goldman Sachs, and other publics that are all in competition. And the market is huge. We have so many different financial instruments. I think it's completely naive to think there's a one-size-fits-all. And also in terms of decentralization, everybody who believes in decentralization is probably not in favor of one single platform where everything else is on. And also the features are too different. Sometimes you need high transaction volumes, sometimes you need lots of data, sometimes you need absolute security, sometimes you want speed of accessibility. So I think the competition is healthy, and I think that's important. We should foster that.
It's interesting because what you're saying, because apparently this is not yet sorted out, right? Some things have been sorted out, check, and some other things are still open for the future. We will discuss it next year again.
Definitely, and maybe adding to what Katharina said, we also think that, and I also that a decision is not taken yet, and the technology has not, one side has not sort of shown that a clear advantage. But the interoperability discussion is very important for us. And this is one of the things which we currently not seeing yet. I mean, yes, we said we want to do this first transaction on the EWPG, and we have done it with one bank, with one decentralized crypto registrar. But if you then consider that there might be other public or private chains and other decentralized crypto registrars on the scenery, then we very quickly come to the point where we as a corporate would like to have simplification of things, meaning onboarding with one crypto registrar is one thing, but would we really need to do that with every other crypto registrar as well? How is this going to be solved in the market? And this is for me one of the prerequisites to come to a stable environment in which secondary markets will also grow, and a scaling then out of that would be evolving or possible better than now.
Let me pose the next question, and then we talk to everyone because of time reasons. Why are we doing this? You know, like removing the CSD or replacing the CSD, that's a feature. That's not necessarily a benefit right away. It can be, but it doesn't have to be. But what are the benefits you saw so far? Christoph, you mentioned already some of them, and others also, reducing the T27 to, I don't know, T plus T21. What else did you see? Removing some intermediaries, this adds to efficiency. What other experience do you have in terms of benefits?
Yeah, happy to step in. So when looking at the current DCM process, across the value chain, you have a number of pain points. When looking at the issuance of bonds, as mentioned before, typically it works via a traditional syndicate. When for certain issuances you can remove the intermediary, definitely beneficial from a cost perspective, which actually will lead to a higher performance for our investors. Another key topic is data. Right now we don't have a kind of golden source when an issuance is launched. It's quite a time-consuming process to get all the data in our order and execution management systems. That's clearly a topic when having issuances on chain, which will be much smoother and quicker. When looking at the trading side, secondary market trading, I guess there can be also cost savings. There can be better liquidity pools as we have it right now. And it's also important for us when looking at settlement. We already talked about instant settlement T0 or T+1 with the Siemens bond. Definitely an atomic and instant settlement will also bring significantly reduced risks, and on the other hand efficiencies in the process. So far we were just talking about the asset side. What is as important as the asset side is the e-money part. So having a CBDC, a central bank digital currency, having a wholesale a digital euro will be significantly supportive in this whole chain. We have billions of euros equivalent we trade on a daily basis. Do I want to settle this in a stable coin where I actually do not know how it's fully backed? Do I want to make use of an investment bank coin where I have potentially a counterparty risk? Clear answer is no. So when creating really the full efficiencies, it's essential that we have a wholesale CBDC issued by our central bank. And a last point I would like to add, Philip, looking at the process post-issuance in bonds, we have the regular coupon payments. When talking about digital equities at one stage, we have corporate actions like spin-offs, corporate actions like rights issuances. We have dividend payments. And when making use of a smart contract for these events, for these payments, it will make life much easier for us. So at the end, I see significant upside potential for our investors. That's what we really take care about. We are a service provider, and delivering best-in-class services and performance for our investors is really key. But also as an asset manager, we definitely will benefit from the efficiencies by making use of DLT.
I agree with all of that, and there's probably a couple of other things I'll just quickly add. I think the whole kind of process of digitization is streamlining the value chain. So you can actually kind of pre-issuance, post-trade, you can digitize that, and that creates obviously an enormous amount of inefficiencies through removing different intermediaries depending on the asset class. I think two other points that are really key. It does actually kind of create more resilience in the market, which from a regulatory perspective is kind of hugely important. And that is done kind of twofold. One, I think if you look at the risks, so settlement risk, operational risk, liquidity risk, you can actually reduce the risks inherent in the system through using the precision of the technology. And as a follow-on to that, actually, if you think about the current macro backdrop and you think about liquidity becoming ever more kind of scarce, same with capital, this ability to kind of, everyone gets kind of caught up with the atomic settlement, you just atomically settle everything. That the key point is you can atomically settle, but it's the precision within which you can settle. So even if you settle T+1, it's the precision of knowing that you can settle to the minute. That's kind of the real power of this technology. And I think a combination of all those, then plus looking at the operational and economic efficiencies to reduce costs, I think that's kind of very powerful, and they're certainly the benefits we see.
Maybe one question, we didn't talk about it in our preparation call, but you know, this sounds amazing, benefits here, efficiency there, and so on. But who is losing? Who is losing here? Is it those banks who are not joining this? You know, they are joining so late that they can't catch up anymore. Are they losing? Or is it the human beings losing? Because with all this efficiency, you have the technology working perfectly, but you don't have any staff anymore. Is this happening or not?
No, I would simply say those who don't prepare will lose. And that's what we have been doing over the last years. And that's what we have also understood from our investors, that the ones who were prepared for this transaction to come, they participated. And there were also others who were not yet there due to internal and external regulatory reasons or any other decisions not having been taken. And we have seen that with other banks as well, to whom we also spoke in the last year before we finally decided for our partner. I mean, we spoke to many of those, but they were not prepared yet. So this would be my simple answer.
As I would say, it's fair, there will be definitely an impact. Yeah? But if we look now, we all done now these transactions to learn. And I think very important is all those transactions now give us a better view about what's happening in our whole processes. Yeah? What does it mean? What still lacks we have also with other products, for example, derivatives, you talked about other ones, if you look at, for example, ALM steering. And I think the output is to be given answers on those questions. What does it mean for your individual organization and the impacts for the following years? As this is a marathon, there's nothing what will change immediately, but we have to get a grab on it, what it means really for the individual organization. That's why you're so much important. You make those kind of transactions to get a better fluency, to tangible it. What is really the impact on your balance sheets on the positive side, but also on what you should be prepared with this discussion. So.
And I think there aren't even enough people with the demographic risk to do all of those back office and middle office jobs. I think it's actually required that we have productivity gains there. And I also think that the whole market still has structural inefficiencies. You have minimum ticket sizes, you have standardized processes that don't allow also for smaller banks or smaller companies to refinance themselves efficiently in other things. So the technology will allow for productivity gains. It will allow for more flexibility and option value. And I think in a time where we can have digital bank runs, we also need to make sure that we don't just have fully digital cash. We also need to get the asset sides in a more digital and more liquid way eventually to also rebalance markets quicker. And so I think it's actually a prerequisite for a more efficient market again. So it's not a question of if, and it's really just a question of how can we use this technology to not just have a tokenized what we already have, but to also find better solutions for the clients and create a better efficient market.
And what is not disintermediated, of course, is the investor side and the issuer side, right? That needs to be there. Matthew?
I was kind of going to draw a point out there. I think actually what you're doing is you're empowering the investor. And I think it's a really good point on the fractionalization. So, I mean, the public blockchain obviously does kind of create this fully decentralized marketplace which really taps into retail. I think the reality certainly from an institutional perspective for us, it's institutions and wealth management. And when I look at the opportunities, even just for wealth management, because you have like a variety of different funds where the minimum denomination, for example, is 5 million, that's a big ticket. So if you can then bring that down to say 100,000, suddenly that opens up a new universe of investors and capital. And then just in terms very quickly on the winners and losers, I don't necessarily think there are winners and losers. I think what it does do by standardization, it means people who have kind of relied on legacy connectivity and never improved their service, they're going to struggle because you're going to be competing on the same standardized kind of process, and then you have to offer a differentiated service. And I think collateral mobility is a really good example of that. There's a whole slew of different custodians across the market. All of a sudden, if you can just seamlessly move collateral on a kind of DLT, you don't need to move from one sub-custodian to another, to another, where you bring in settlement operational risk, you've got enormous costs. That is eliminated. So people need to think creatively about how they kind of address that.
No, I have, we are close to be done, so and we have to touch the DLT pilot regime quickly. What's your opinion about it? It's maybe close to be the end of the panel. Is it a good regime? What is it, the DLT pilot regime? Will you benefit from it or not? Can you use it?
Looking at the entire value chain, it's important to also have a functioning secondary market for digital assets. And with the pilot regime, we will get the opportunity to have digital assets. We trade it right now with a purpose to hold it until maturity. To have their functioning secondary market. That's why I'm highly supportive and went live the regime 23rd of March, so last week, and I'm really looking forward to have the products we traded so far, to have them also on exchange, on platform.
I would like to add to that, yes. I mean, it's quite early and young. We have to see, it's still blurry, but hopefully it will develop into that direction which Christoph mentioned, meaning supporting a secondary market development, besides of the topic of the interoperability, which I described before, which actually, Matthew, you also picked up, where we think this has to come together. And last but not least from our side, that some of the regulation which is diverging currently need to come together. So if you look on the listing, for example, currently of such digital crypto bonds, we can't list them. As the European regulation is actually requesting or requiring a CSD. So there is also, you know, this divergence between now the EWPG and maybe other regulations. So this has also to harmonize and come together.
I mean, the only point I'd add on this, I'm not going to mention too much more, I think it's a good step forward, and I think the European kind of Central Bank, European Union have been very progressive, and I think they're leading the way. There are certain features of the EU pilot which, you know, you'd probably want to change, but what it does do, it offers us the ability to kind of create secondary markets. So depending on how we're going to basically apply to get into the actual pilot. And that, to me, is going to unlock adoption. And I think everyone's mentioned that there's generally, it's like a private issuance because there are a limited number of investors. The reason for that, you know, we have hundreds of investors who come on these calls, to Christoph's earlier point, but secondary liquidity is the key piece. So once you can actually offer that, be it in Europe, the US, the UK, wherever, I think then you'll see actually an acceleration of adoption, which will be very powerful.
Last remark by you, Christoph.
Philip, I would like to make one point. We were looking right now, what are the benefits from an investor perspective? What are the benefits from an issuer's perspective, like KfW or Siemens? But I think also as important is to look from a helicopter perspective. What does this mean for the European Capital Markets Union? What does it mean for Frankfurt, for Germany as a financial place? And we have a great regulatory environment, which was already addressed in the previous sessions. We have fantastic intelligence sitting here on the issuer side, on the investment bank side, on the investor side, and we really have a great opportunity by really being very proactive on this DLT blockchain usage, combining traditional finance industry with fintechs like Katharina to really bring our financial place forward here. And I think that's important to have this big picture also in mind.
Perfect. We have to unfortunately close here. Thanks for these nice closing words. There is one question which we could not touch, but we would also wanted to discuss that it's not about just bonds, but you mentioned things like we need to have repo transaction on-chain, derivatives on-chain, collateral on-chain, interest rate swaps on-chain, we have to have the euro on-chain and all kinds of other things on-chain. So that's the demand to the regulator to not stop here, but basically move on, employ people and get things done and continue, at least for speaking for Europe, as we have seen it in the last couple of years, at least in the blockchain space, I think that went quite well. Thanks for everybody here, and Marcel, happy to have you again here for moving on with the agenda.